Welcome back to another video. None of this is financial advice, so please do your own due diligence. I just want to do a quick update. However, there are so many nuances to Gamestop, so this might actually be a very long video where I'll go into depth. So first, let's just look at the weekly time frame. So the weekly, I'll start with the weekly because it's easier to track and the counts are quite simple. We can see that this one, we can just argue that this is a wave 1 and wave 2 would be a retracement back to around the 70.7 or 78.6%. Now if we do the Fibonacci extension, we can see that if we went from wave 1 to 3 into 4, we can see that it roughly went to approximately 0.786 for wave 5, which is honestly one of the least likely targets. It's more likely to terminate at 0.618 or 1 for the 5th wave. So by the looks of this on the weekly chart, we can see that this is likely a wave 1, 2, 3, 4, 5 into a retracing into a corrective wave 2 and down here where we are right now. So now let's just go into a lower time frame, as in the daily time frame. So this pretty much, on just a first glance, it tells us about the same story as the weekly, but I remember the scenarios I had in my previous video of what I am tracking on the daily time frame. Now, if you recall, I had set that this corrective wave that we were in, I said that if this is truly a wave 4, it would have to recover quite quickly, because this was dragging on for way too long. And I had mentioned that wave 4 is usually proportionate to the entirety of the wave, as in the entirety of 1, 2, 3, 4, 5. And most of the time, wave 4 is a ratio of the entire wave, which is why I had said that it's unlikely that we were in a wave 4. Now, however, if we were to count this wave 5, seeing that this was actually 1, 2, 3, 4, 5, the theory can still be valid that this entire thing is a wave 4, because we had this extended wave 5, which was actually for about 32 days. Now I will explain this a bit further in the lower time frame, where we will encounter some nuance. But pulling the extension from this wave 1 to 1, 2, 3 into a 4, we can see that this reached about the 0.618 level, which is the common termination point for, again, wave 5. So of course, given this, we can clearly see that we have two very clear impulsive waves, because we had this one from the beginning of January 7 all the way to here on February 4, and additionally we have this from March Friday 27 going to May 1st, Friday May 1st. So we have this 1, 2, 3, 4, 5 and also 1, 2, 3, 4, 5. These are very simple and very straightforward counts. Now again, we know that impulsive structures, where wave 4, as in this entire wave here, will not enter into wave 1 territory. And if you look at that, it is literally right on the cusp. It did not cross over though, which again validates that it is an impulsive wave structure. And I mentioned that because where we are now, as in this thing here, is important because it can tell us exactly what to expect and where we're going. The missing piece is, where do we begin the wave count? Because again, at the moment, we can see that there are two very clean and clear impulsive moves. So it becomes, is this a 1, 2, 3, 4, 5, a 1, 2, 3, 4, and a 5, or a 1, 2, 3, 4, 5. So at the moment, we can count it as this entire wave as a one wave move. Or if we keep retracing lower, as where we are right now, we can count this entire thing starting from end of November all the way to where we are in the 1st of May. This can be counted as a leading diagonal, and if you believe that this is a leading diagonal, we would be expecting a lower price target to retrace to until we start moving up again. But why did I bring up this leading diagonal theory again? Now, we'll have to go into the 6-hour time frame, or any hourly time frame is fine. So again, reiterating, we do have two very clear impulsive structures, 1 and 2 over here. And we can either count this as a 1, 2, 3, 4, and 5 all the way over here. We can count this as one structure, and this would be obviously a leading diagonal because wave 4 clearly enters this region of wave 1. We already have some overlap here, whether you count this wick or you don't count it. Now, one major difference between the daily and the hourly time frame is of course the candle wicks. This is again why, if you want to ignore the noise, it's always best to view the charts in a larger time frame. Because again, if we go back into the weekly, you can see that there's not a lot of wicks that you can visibly see and count. We had this 5 on the hourly time frame, but it's not even close to where we are on the weekly candle. Now again, let's just go back into the hourly time frame and say, why can we count this as a leading diagonal? Well, because again, waves 1, 3, and 5 for a leading diagonal can be counted as either a 3-wave count or a 5-wave count. So we can see that these two are impulsive, and this one, the one that starts this entire move, is not as clear. So if we were to choose this move as the first wave, as the starting wave for a diagonal, we can see that there's overlap into this territory from wave 4 into wave 1. Even if we were to say ignore this and just say let's just start counting from this area instead, right? So let me remove this and show you what I mean. If we start from here saying that this is wave 1 into 2 into 3 into 4 into 5, we can still see that there is actually overlap from wave 4 and into wave 1. Now the nuances come from finding the Fibonacci levels with or without the wicks. Now let me explain what I mean. If we have of course, if we were to count this as 1, 2, 3, we go down here into including this wick. If, of course, this is 1, 2, 3, 4, 5, 5 has a relationship to 1 and 3, 1 to 3, and 4. So again, we would expect a 0.618 or a 1 as the more common levels. Including the wick, we can see that that's not actually true. It stopped right in the middle of 2 Fibonacci levels. Now, however, if I were to ignore this wick for wave 4 and just move it into this location, we can see that this actually stops directly at this 1 Fibonacci extension, which is a more probable count. this goes for the Fibonacci retracement as well. If we were to go from wave 2 to 3 to find where wave 4 terminates at, if we were to include the wick, it would stop in the middle of 78.6 and 88.6. However, if we were to ignore this wick, we can clearly see it terminates right at the 70.70% retracement level. Now, what is even more interesting is that if we go back to this move that we had here and just do a retracement level from including the wick, which is not shown on the daily or weekly time frame, we can see that this actually terminates right at the 88.6% retracement. So it now becomes whether this is to be included, as in whether this wick is to be included in these counts, which are only shown on the smaller time frame, or if it should be ignored and only focused on the daily time frame. Because again, if we were to look at this termination point here at 28.79 roughly, and we go back into the daily time frame, we can see that on the daily time frame, this candle only terminates at 26.9, but we know in a smaller time frame it was up to $28. So without including the wicks, the counts are actually very immaculate. However, in the daily chart, we don't get the same Fibonacci levels because again, the wicks are not visible there. So let me just provide an example real quick. If we were to count this move right here, of course, if we have this leading diagonal again, excluding the wick, we can go down to this, of course, 1, 2, 3, and then terminate down in wave 4. We can see this very clear wave 5 ratio, like one Fibonacci extension from the entire wave before that. But if we were to go back into the daily and do the exact same thing and start from this wave 1 leading diagonal into wave 1 leading diagonal, wave 2, 3 terminating over here, and then wave 4 down here, we can see that it just touches 0.618, but it's nowhere near the smaller time frames termination point of the one Fibonacci extension at 2838. And ultimately, this is where the nuance is. Are we going to count the wicks or not? Because in one case it is impeccable, but in the other case it's not so clean, but it is still very valid. Again, wave 4 in this 1, 2, 3, 4, 5 is a very clear impulsive wave because there's no overlap between 4 and 1. We drop down into the hourly time frame and we can clearly see there is overlap between 4 and 1 if you were to include this wick here. And of course, not only that, if we were to include the wicks, we have to include this because this is also a valid count where it retraces to 88.6%. But what is beautiful with Elliott wave theory is the rules, right? The corrective wave will always retrace back into the territory of wave 4. And wherever you look, this is true. So we know right now, where we are right now, is a corrective wave. And it's clear that we have hit the threshold. If this is the wave 4, we have cleared this entire wave 4 retracement of this small degree, which retrace back down here. But in a larger degree, if this is wave 4, whether you're including the wick here or over here without the wick, we can see that it has cleared the 4th. Maybe not so much with the wick, but if this is the wave 4 termination, we can see that it has already passed this level. And obviously this is true whether you are counting this as a leading diagonal, because it will be a 1, 2, 3, 4, 5, and this retracement will have passed these two wave 4 area, this wave 4 area here. Or if you were to count this as a 1, 2, 3, 4, 5, because wave 4 would have been essentially the same area, this area. Secondly, we know that a leading diagonal will most likely terminate at this 78.6% retracement or 88.6% retracement level. So whether we include the wick or not, we have retraced deeply into or close to 78.6%. So that means that this current corrective wave that we're in right now is likely going to finish very soon or has already finished. This means again that we're heading into a very strong wave 3, and this means again we will most likely be making local higher highs and higher lows. And of course, whether you look at this on the hourly time frame or on the daily time frame, you'll see that it is almost or close to touching this 78.6% retracement level. So again, the corrective wave almost done termination, has almost finished its run essentially. Now, one thing I want to look back on is the crazy move we had on the Friday, which is essentially this move here, the 19 or I guess 20% move on, what was it, Friday, May 2026, Friday, May 1, 2026. And did this surprise me? Well, yes and no. Let me reiterate what I have speculated many times before. Wave 5s are always very impulsive when it comes to GameStop. We've seen it time and time again over here and the initial move back in 2021. One thing to remember is that with such strong moves, the retracement will always be equally as strong. This is essentially the squeeze-like structure. We have a very strong move up, only followed by a very strong move down. Because essentially the squeeze-like structure is like a compressed, extended, impulsive move. And you're gonna get something like that in this wave 5, where we have a very strong and extended impulsive wave 5. And of course, again, because the corrective wave that comes after a finishing wave 5 always retraces back to the territory of wave 4, more specifically, if I remember correctly, it is wave 4 of the smaller degree of wave 3. Now, I don't remember if it is exactly those words. I was trying to look for it in the book, but could not find it. But what is true is that it will always retrace to the territory of wave 4. Now, if we look back again into this move, impulsive move that we had here, we can see that there's a 1, 2, 3, 4, 5. This is wave 4. And we can see that this clearly retraced all the way back down, surpassing this small wave 4. Now let's go back even further and look at this. Now, whether you want to count this as 1, 2, 3, 4, 5, or just a 1, 2, 3, 4, 5, we can see that this is wave 4, and we clearly have touched and also surpassed it. Now, again, if we go in here, if we can see, or if we can find some wave 4 here, most likely this area, this one bar, we can also see that it has surpassed this wave 4. And again, this is exactly why I had mentioned in my earlier videos that I believe a wave 3 will be a battle between the longs and the shorts, with the squeeze-like move coming into fruition on a wave 5. Patience is virtue, so position yourself early as we are far, far away from a wave 5 move. On the daily, we can see that this 1, 2, 3, 4, 5. Wave 5 was essentially 2 days long, right? 1.75 and 6.33%. This move entirely was 11%, around 11.4%, and it happened in 2 days. And that was a wave 5 in a smaller degree. Going back into this one, where we have a 3, 4, 5, it's the same thing. We can count this from the bottom to the top. 14.27% in 1, 2, 3 bars. That move, even though these wave 3s are definitely, they move a lot higher in terms of percent, but they also move a lot longer. This was 11 days, while this was only 2 or maybe even 3 days. Same thing with this that we have here. This move was 6 days at 20-ish% versus a 3-day move, which is equal to 14 point whatever percent, right? So again, I believe that we are far away from the wave 5, because if we go zoom out, of course, if this is a wave 1 and it made a 35% move into a wave 2, imagine what's going to happen with a wave 5 of a smaller degree of the upcoming wave 3. And if we are in a impulsive structure of this larger, even larger degree, as in seeing it go 1, 2, 3, 4, 5, just imagine how high the price would be in the wave 5 of 5. Do your best not to FOMO into moves like we had on that Friday, because again, we know that that was not it. The price has to build structure, and there's no chance that this wave 5 was going to bring us from approximately like $24. There's no chance that it was going to bring us all the way up into even 300 whatever dollars within one overnight after hours whatever trade session. Now, I personally believe that we are still in the fire emoji right now, as this is the precursor to the squeeze-like wave 5 move that I strongly believe will be it. Now, again, whether this is going to be a larger degree C wave, right? Larger degree C wave or a 3 wave. The wave 5 of one smaller degree is what I am personally looking forward to, because I believe that is when literally all things break loose. So I will end the video here for now, and I'll let the price action speak for itself, because I can tell that exciting times are ahead of us. So I'll catch you guys in the next one.